Today, we're diving into a topic that concerns us all: inflation. As prices rise, our hard-earned money loses its purchasing power. But fear not. In this video, I'll reveal the best investment strategy to combat inflation and protect your wealth. Don't forget to hit that subscribe button and turn on notifications so you won't miss any future episodes. So, let's get started. Before we delve into the best investment against inflation, let's quickly understand what inflation is. In simple terms, inflation is the sustained increase in the general price level of goods and services over time. When inflation rises, the value of your money decreases. Inflation has been a recurring phenomenon throughout history. It's important to plan our investments wisely to safeguard against their erosive effects. So, what is the best investment against inflation? Real assets have proven to be a reliable hedge against inflation over the long term. Let's discuss some of the most effective real asset investment options. Real estate is a tangible asset that typically appreciates in value over time. As inflation rises, the prices of properties tend to increase as well. Investing in real estate can not only protect your wealth from inflation, but also provide regular rental income. Moreover, real estate investments offer the potential for tax advantages through deductions such as mortgage interest and property taxes. Additionally, you have control over your investment, allowing you to make improvements or adjust rental rates to keep pace with inflation. Another great option is investing in gold and other precious metals. Gold has been a store of value for centuries and has a long history of preserving purchasing power during times of inflation. When the value of fiat currencies diminishes, gold often becomes a sought-after asset, serving as a hedge against inflationary pressures. It's important to note that investing in gold can be done through physical ownership, gold exchange-traded funds ETFs, or even gold mining stocks, depending on your risk tolerance and investment preferences. Additionally, stocks can be an excellent hedge against inflation. Companies that have pricing power and can pass on increased costs to consumers tend to perform well during inflationary periods. These companies often belong to sectors such as consumer staples, energy, utilities, and healthcare. By investing in stocks, you become a partial owner of these businesses, allowing you to benefit from their growth and potential dividend payments. However, it's crucial to research and select stocks of companies with strong fundamentals, solid track records, and a history of maintaining or increasing dividends. Now, the key to successful investing against inflation is diversification. Instead of putting all your eggs in one basket, consider building a diversified portfolio that includes a mix of real assets, stocks, bonds, and other investment vehicles. Diversification helps spread your risk and protects your portfolio from being overly reliant on a single asset class. By diversifying, you can capture the potential growth of different investments while mitigating the impact of any underperforming sectors. In conclusion, the best investment against inflation involves incorporating real assets like real estate and gold, along with selectively chosen stocks. Diversifying your portfolio across multiple asset classes ensures that you're well positioned to combat the erosive effects of inflation and protect your wealth in the long run. Don't forget to hit that subscribe button and turn on notifications so you won't miss any future episodes.